Al, as I ended that last segment, and you talked about earlier, the public or the average investor is manipulated into certain trades and investments based off any articles they can read online or anything they see on TV, which brings a lot of opinion because they're hearing opinions. Now, do these opinions have a bias? And just to give an example here, if you think about, a lot of people like to watch CNBC for their news and their investment advice or information about the stock market, right? But think about this. CNBC is owned by somebody. They are actually owned by Comcast. Now, Comcast is owned by Vanguard, okay? Vanguard is owned by BlackRock. Now, think about that. If BlackRock or Vanguard, which are huge investment firms, if they want the public to do something, it's possible that they can tell people on CNBC to say certain things and manipulate them or the public to do what they want them to do. So us as the average investor need to understand that's possible, but being able to make decisions based off of facts, and that's based off a price chart. Now talk about some of that stuff. Unpack that a little bit. Why could they do that? Some of that stuff? Why might they want to? And how can we eliminate that? That risk of them doing that to the public.
Well, first of all, let's all agree that the reason those companies are in business is to make money. Their concern is their bottom line. How do they make more money? And all of those companies that you just mentioned, Vanguard, BlackRock, though their bottom line really it can be influenced significantly by the emotional reaction of the public. And think about it. If a big firm, Wall Street firm, wants to buy something at a low price, what do they have to find? They have to find someone willing to sell at a low price. When they want to buy what did I just say? Did I say buy low? They want to buy low, they have to find somebody willing to sell low. If they want to sell high, they have to find somebody willing to buy high. Mm-hmm. Who is that? Well, those guys control about 90% of the trades, which means it's you. You're the ones that are selling low, buying high. And if you think that maybe it's so important for them to have you do that, is it possible that maybe they're sort of manipulating things, maybe skewing news a little bit, especially when they control the news outlets? This is the important thing. We know, I think everybody knows you're supposed to buy low, you're supposed to sell high. What we want you to do is trade what you see, not what you hear. But you have to know what you're seeing. You have to know how to use that. And the important thing is that it's all there for you to use. It's all on a price chart. If there was a field of mud, Josh, and an ant went across that field of mud, you wouldn't be able to tell that an ant crossed that field of mud.
No, I probably wouldn't even see that ant.
You wouldn't see it. But what happens if an elephant crosses that field of mud? Huge footprints, right?
Correct.
Well, look at a price chart kind of as that field of mud. You and I are the ants. All the people listening, we're the ants. It really doesn't appear on a price chart what we're doing. The activity that we do doesn't appear there, but it does when the big elephants cross that price chart. That's the institutions. So they're leaving these big footprints for us, and instead of trying to form opinions based on what we hear, because the market doesn't care what your opinion is, why not just follow what is in fact impacting price? Because the most important thing for anybody who's going to be a trader or investor is identifying the proper and the most advantageous price for them, one that's going to give you the greatest opportunity of having something move in your direction. If you want to buy something, what do you want to have happen to the price?
Go up.
You want it to go up. If you want to sell something, what do you want to have happen to the price?
Go down.
Yeah. So what causes that? Is there a way of identifying what causes it? Yeah, it's those big elephants that are leaving these big footprints in the market. So what if you could identify, actually, maybe that elephant is just dipping its toe in the water or in the mud just to kind of see if it wants to make that crossing. Well, that's what we're identifying. We're identifying where they might be and are most likely to be moving price. It could be that same day. It could be the next day. It could be a week or a month later. But they're leaving these footprints for us. We can identify that and use a strategy that will help us to make our entries and our exits at a price that is most advantageous to us.
Yeah, and the reason because of that is the institutions, I believe the stat is they actually control about 90% of the market.
That's correct.
So we know it's the big money or the JP Morgans, the Buffetts, the Goldman Sachs, the major big banks and firms, they control the markets. They move the markets. They are the elephant in the room. And you do need a strategy to identify that right price. And that strategy that's designed to help you, identify that or teach you to do that is that core strategy, what Al is talking about. So Al, when you're talking about needing the right price in a trade or an investment, you need to also understand the right asset because
Correct.
Each asset has a different reason on why you would utilize it based off of your objective, whether you're looking for that shorter term style of trading or that longer term investment. Now, talk about some of the shorter term that you're seeing a lot of people want to understand more about, like the institutions are using, what they're doing for income.
Yeah. Well, first of all, I think it's important that everybody put a plan together, an investment plan, a strategy, and that should include two main components. One is a timing component, and that's that core strategy that you mentioned. It's so important. The most important thing, in fact, is the proper price that you want to either buy something or sell something, because that's going to determine the quality of the protection that you have, your risk management. It's also going to impact the potential returns that you can get. So learning how to time changes in price or movement in price, whether it's an individual stock or the markets in general, is key. That's what core strategy that Online Trading Academy uses or have their students use. That's the timing strategy. That's the most important component. But the second part is the correct asset. I think I've used this analogy before, but if somebody wants to dig a ditch, you can use a backhoe to dig a ditch or you can use a shovel. Both might get the job done.
I'm using that 330 cat, Al.
Get on that cat and start digging that ditch. You're going to get done a lot faster than I would if I was using a shovel. In fact, I might not get done at all. And that's kind of that second component, the correct assets. For each individual, you should have a goal or goals that you try to achieve. And start out by identifying those goals. So look at the end point first. When you can identify the goals, then you can identify whether you're going to use a backhoe or a shovel to help you get there. It's the vehicle that helps you get to your destination. For some people that are looking for achieving short-term goals, then you're going to use something different than somebody who is looking at achieving long-term wealth buildup, long-term retirement goals. The Online Trading Academy teaches both of those, so there are strategies and there's education that will help you achieve your short-term and your long-term goals.
Let's start with those short-term assets.
Let's start with short-term because that's something that everybody really should learn and know how to use, regardless of whether you are still working or whether you're in retirement. Because when you're working, you want to build up the assets that you have. That's where you're in kind of that accumulation phase. But if you are working and you have short-term goals, can you put together a portfolio that is intended to be a long-term portfolio? In other words, that you have to hold on to for 10, 20, 30 years. Does that help you with your short-term goals? No, it doesn't. So you need to use something that is more ideally suited for the short-term trades and short-term investing. There are several assets that are available, and part of what is identified in the classes that we have is to help you identify the proper asset for you. Which of those products, so to speak, will help you with your short-term goals? It could be futures, the futures market. It could be the foreign exchange market. It could be the options market. Now, a lot of you listening either don't know anything about those markets, or if you know anything about them, it's probably bad news. And that's because the people that try to use them don't know how to use them. It's like anything else that you do. You have to understand how something functions. You have to understand what is specific to that particular asset, and you have to know how to use it to your advantage. And those are all things that are easily taught. The education is available there to do it, but the benefits are huge, and that's the reason that the smart money Wall Street uses these on a regular basis.
Yeah.
They're not putting together a portfolio and just sitting back and holding on to it for decades. They're day trading, weekly trading. We can do the same thing. Those assets are available to all of us. It's just that Wall Street's not telling you about them.
Yeah, the average investor, or we should say the public, people just are uninformed. And it's unfortunate, but that's why we're seeing so many people coming into these investing classes, because they want to learn more. They feel, heck, I'm missing out on a lot of great opportunities. And one of the key things I think Al talked about is having a plan. Every investor or anybody in life makes plans and plans on a Friday night or a Saturday night to go do something.
Sure.
They make plans for their investments or their future as well. And that investment plan,
They should.
they
but
should,
They don't.
they should. But that includes goals, right? Like Al's talking about. What is your objective? What is your 2-month goal, 6-month, maybe 2 to 5 years, whatever that may be, and then you have something to strive for. But you do need a proper timing strategy based on what the market is doing, and that strategy is that core strategy, and that's designed to help you find those, I guess, the imbalance of buyers and sellers to understand where might I want to be an investor, where might I want to get out of the market, but to do that properly, but also with confidence. And Al, we've covered the shorter term assets in the trading side. In the next segment, I want to talk about retirement. We have a lot of listeners that are preparing for retirement, but still feel like they're missing out on these great gains that we're seeing.
Right.
So coming up next, let's talk about those longer term assets within retirement accounts. This is Josh and Al, Investing with Confidence. We'll be right back.